Hi, good afternoon. Today is September 4th, 2019. My name is Olawale Okabola with Spartacus Trading Corporation, here to bring you the recap for today, which is the 4th, and pre market, preparation report for the 5th. Starting out with today, I did provide a mid morning report talking about what happened today as expected or what should happen. We talked about breaking out from the inside day. If we broke out to the upside, we needed to hold the gap. The market did hold the gap, signaling a new auction to the upside. So we have a breakout that was accepted, a breakout of a 2 day balance area. Basically, the market traded higher all day. Well, I think it liquidated for a little bit. In the morning, liquidated. I talked about how the market needed to stay above the overnight high. I talked about how today, from the open and the pre-market report, the market need to get to the overnight high and the value needs to develop above the overnight high. If not, you can expect some liquidation. That's what happened because the market was a little bit heavy, and those who want to take profits going to take profits. Makes sense. So we liquidated. Market caught a bid right around where the 2 month half back that I talked about in my videos for I guess since the beginning of this week, talking about how the September open is the 2 month half back. I'll show you here. We're in a 2 month balance area for the month of August and September. Half back is the open for September. So the market basically caught a bid from August settle, which is probably mechanical. What do you think? Do you think it's real strong sellers buying, waiting for August settle to begin to take the market up, which it happens to be at as well as last week's settle? Nevertheless, market one time frame, pretty much the remainder of the day, balanced, broke, got a pullback low, traded higher. And then the market finally took out the overnight high, closed on the high, giving us a poor high. I'm sure you can figure that out yourself. So that's what we got going into going into tomorrow being the 5th. So let's get right into the prep report for the 5th. Going through my notes real quickly. The market, let's go to the bar chart. So we talked about the monthly. We are above the halfway mark of these 2 months. We're above the halfway mark. We're trading above. That could be possible change on a longer time frame than a day time frame. Just using simple logic, in a 2 month balance area, where are we? Are we above the halfway mark or below? Currently, we are above. Possible change because on the monthly, the month just got started. We're only at the 4th. We got a couple 30 days, I think, in this month. So we still got, the jury is still out. On the weekly, I talked about the higher lows on these weeks, this multi-week balance area, 1, 2, 3, 4, 5 week balance area, and also a 6 week balance area within 5 weeks within the 6 week, because all of these months close within each other, and this month close within that month. So that makes all of these makes the 6 weeks in place. We are currently trading above the 6 week half back. Here's the 6 week half back. Okay, we're trading above the 2 month half back. So you see how this is all making sense, right? So we're currently above the 6 week half back for the week. We got excess thus far for the week, and we got the clues from these higher lows from the weekly bar. Something we want to pay attention to. Now, where are we? We are approaching these weekly highs that are not far from each other. What do you think is above there? More than likely stops, right? We're all savvy enough to understand that. So this is the daily bar. We broke out, as I talked about, from a 2 day balance area. We held the gap. Sorry, I had a minor distraction. Okay, so we're now approaching these multi-day highs. Everybody in the world know what's above here. Stops. So now we're going to get into the nuance for tomorrow. What has to happen? Well, let's do this first. Let's talk about today's structure. Okay, I'm not a fan of today's structure. The market labored just to take out the overnight high. If off a gap, if the market was truly strong and it wanted to go get those stops up above, we would have gapped and gap and go, right? So let's talk about today's structure. This is how I'm looking at today's structure. First, going into tomorrow, I'm going to deploy the spike rules for this level here. We got a double print spike, usually a spike of single prints at the end of the day. But because we closed on a high, on a poor high, at the end of the day, I'm going to call this a spike, right? So I'm going to give this my spike base. I'll deploy the spike rules. If we open above the spike base, that means prices are being accepted. More than likely, the market would trade higher. That makes sense because being accepted here puts value higher, right? If prices open below the spike, that is negative. That means that the market did not accept the higher prices, even though we closed on the high, and and uh, and value will be unchanged. To back that up, we got a couple of anomalies I want to pay attention to. There's an anomaly here. We got an anomaly here at the spike base. We got an anomaly here. We got an anomaly here. We got an anomaly there. We got an anomaly there. Sound like a broken record. We have another anomaly. So let's count them up. We got one, two, three, four, five, six, seven. Seven anomalies. We also have a point of control that's 8 wide that did not wasn't going to migrate higher or lower once we hit 8 wide. 8 wide being at the point of control. So the point of control is 8 wide right there. So what I'm saying is that the market did not trade up smoothly on its own. Okay. So I'm making the case basically. And hold on, one more thing I wanted to show you. You see today's volume, the highest volume at the end of the day. Red represents the highest volume, but I can break it down into a little further detail. Uh, these are 30-minute bars, 15-minute bars within a 30-minute period. So these are 30-minute periods that encase the 15 minutes. M period, which is the really right before the 4 o'clock close. Look at the volume that came in at the end of the day: 12,000, 13,000, 20,000, 16,000. Then an end period, which is the runoff, so that goes from 4 o'clock to 4:15. The market closes at 4. You have 10,000, 14,000. Then I also have the block trades where someone is banging it at 667 contracts at market: 711, 570, 264, 378 at market. Block orders. These are not 1, 2 lots. These are block orders. Big orders coming in at the end of the day. And if you look throughout the day, there is nothing even close to that volume coming in today. Not even in the beginning when the market opens, where you'll see, some high volume because, emotions are going crazy, especially after a gap, right? 9,000 was the highest all the way to the end of the day. That's very suspicious. Right above our spike base that I'm talking about. Okay? And then we close right there on a high, on a poor high. Now, with you knowing what's there, I'm going to say this market needs to gap and hold the gap. Or if we gap and hold the gap, that means something came in and it's game on to the upside. We'll have higher value, so you just want to monitor for what? One time frame and some elongation showing that the market wants to move higher. If the market does not gap and open within the spike, it's still at least from the open positive. But if we can't clear this and stay above this volume, that could be trouble. If the market opens higher, say gap, and the gap gets filled and we clear this volume, that could be trouble to the downside. Not trouble, but that can be a sign. Let's just say that. That sounds better. That can be a sign that something's up to the downside. Could be up to the downside. You want to watch from continuation, you definitely want to get below the spike base and then see the market trade lower, which there's some weak references under here. I'm just not showing it. I'm just showing the anomalies, but there definitely are some weak references under here to support some liquidation. Then everybody's eyes, you take it a chunk at a time. We have a pullback low at J. You have the pullback low. So you take a chunk at a time. The market opens up, can't hold it open, open above, hold a gap, comes, clear this volume. You want to see if the market can get through this. If you're short, get through the spike base. You're still short or get short the spike base. You want to see the market be able to get through this pullback low, which I can tell you is weak. And then so on and so forth. Remember, in here you got unchanged value, so you definitely want to see one time framing lower. Okay? If the market opens up, can't get any acceptance here, continues to trade up, well, it's game on to the upside. If the market opens below the spike using the spike rules, that means the prices was not accepted, then you can begin to think, were these sellers banging it out, that high volume there, banging it out at the end of the day, taking advantage of people going home, not knowing what's going on, and then we trade lower. Now let's go to the bar charts. You can see that, and we know that stops are above here. So naturally, we want to see these stops get elected. They can definitely get elected in the overnight. All I'm saying is if these are truly stops and there are a lot of, if there's a lot of stops that have accumulated here, then we should have no problem gapping and holding a gap. If for some reason, maybe somebody takes the opportunity or traders take the opportunity to sell this market again, they need to get something for the downside, and then you can monitor to see if they're getting anything from the downside off the in the beginning. If we open up higher, values against them. Okay, so let's just play to the upside. I talked about the downside and what you need to monitor for. One time frame and take a chunk at a time. Get below the spike base, get below the pullback low. Then probably is game on to try to get into the gap and then fill the gap. To the upside, go back to the bar charts. We need to clear this high, which this is a single high up here. If we have stops up here, we should be able to clear that high at 29.46. So we have this high at 29.46. This high from the bar chart. That is the high from August 2nd. We should be able to clear this high and trade higher. Then we get into this. This is the daily bars. Then we get into this range, which is 60 points going down. And off of the volume, I have the volume, it's 4.7 billion, which is pretty light for 60 points. So if this market is there, in fact, a short covering rally or the momentum is to the upside, the market should have no problem taking out this high from the second, getting into this range, which is light volume, and beginning to trade higher. How much higher? Who knows? I don't know that. But if the market's traded on its own, that's what it's supposed to do if you have one, a short covering rally, or two, just the momentum's just taking this market higher. The market's going higher. That will back up the thesis of possible change because we're trading above the 2-month balance area, 2-month half back. I'm sorry, the 2-month half back that I talked about earlier in the video. If you're not sure, you can rewind this video and watch it a couple of times. So that's what's going on. That's what we need to see. Once again, we get above, hit the stops, get above this high, then get into this range, which was 60 points off 4.7 billion, which is light. So we should have no problem chewing through there. What you want to see, you want to see one time framing higher. Of course, you'll have higher value confirming that, but one time framing will get this market moving. This move could happen in the overnight because we did close on the highs. So I don't know exactly what's going to happen. I think that how the overnight inventory plays out and where we are tomorrow would tell us a lot. And, that's all I got. I know I've said a lot. I know this is a long video, but I want you all to understand the dynamics and the nuances of what's going on in this market so you can position yourself to be on the right side. You might want to watch this video a couple of times to make sure that you are prepared and ready to go because tomorrow could be a very, very fun day. All right, that's all I got. This is Olawale Okabola with Spartacus Trading Corporation. Wishing you a good day. Take care, everybody.